Let's talk about Oracle, ORCL. Group number two, this database software group, and Oracle seems like it's a stock to watch right now. So talk to us about an option trade here, Harold, with a bullish bent.
Yeah, so first off, it formed a very long base, and eventually did break out and made a nice move to the upside. And what attracted me to the stock, if you want to go back to the daily, is the support at the 21 day. So down a little bit, but still holding the 21 day. Also, you see the 50-day moving average is rising, so it's not too far above the 50 day. So that's what really, and then it's in a strong industry group. So a lot of things that are positive about this stock here. So the trade is, and you can buy this either by the shares or an option. So I'm going to show you an option play. I'm going to do a bull put spread in Oracle. So let me share my screen here.
Sounds great. Yeah, and while Harold's pulling that up, Harold, you like those credit spreads?
Oh yeah,
Give me
yep,
that premium.
yeah, absolutely. And
Good stuff. And you usually like going around what, 45-ish
yeah,
days out?
45 to 60 days max. So are you seeing my screen here?
We are. We've got it.
Okay, good, good. So so I've got Oracle here. So I'm going to go out to 53 days out to the September 15 expiration. So, Oracle's not a high flyer. It's typically a steady moving stock. So want to give it some time to work. So I'm going to go out to the 53 days out, and I'm going to start out by selling the 115 put. And then for protection, I'm going to buy the 110 put. All right, so that's going to be a credit. So I got filled earlier today at $1.61. So let me raise that so it matches my numbers here. So $1.61 is where I got where I got filled earlier today. So let's take a look at the numbers. Click on confirm and send, and here's our so I always like to look at the break even. So 113.39, stock's trading roughly at a 117. So I like that break even to be below the stock price. And then of course, our max profit is the credit received. So let's take a look at some other numbers. So we're going to look at the probability of success, and then how many contracts should we buy on Oracle. Let me take that down. And then on the left side, so I've got some notes. All right, so probability of success. That's the first thing we're going to have to calculate. So to calculate that, we first need to get the our risk, our actual risk. So we take the width of the spread, which is $5. That's the width of the spread minus the credit received, and that's going to work out to $3.39, or in option terms, $339. So at $339, that's our actual risk, as you see here. To determine what the probability of success is, we take the actual risk divided by the width of the spread, which is $5, multiplied by 100. That's going to give us a probability of success of 67.8%. So not bad. Now, return on risk. What kind of return can we expect? To calculate that, we take the credit received, which is $1.61, divided by our actual risk, which is $3.39, and that's going to give us a return on risk of 47.49%, almost 47.5%. So, we're 53 days out. So if we go to expiration, that's not a bad term. If it bad trade if it turns out to be profitable. So based on all these numbers, how many contracts should we buy? So we're going to take the $2,500. So that's what we determined based on our portfolio, our level of risk, etc. We're going to risk $2,500 on this trade. So to calculate the number of contracts, we take that $2,500 divided by the that should be 339 there, and the number of contracts. So it's 7 contracts. So I'm going to raise this number to 7. And then managing the trade. What do we do with it? So first thing, I've got to lock the profits. I'm going to take half or 50% of the credit received. So that's good. In this case, it's going to be about 80 cents. The other way I like to manage the trade is if I get 2 closes below the 21-day exponential, I try to trim it. So trimming means I'll just take a little bit off. I don't have a certain number, but I do like to take a little bit off the table in the event that the stock keeps going down, or we get down to 21 days to expiration, 21 days. We call it DTE, days to expiration. That's when I make a decision. Is this a trade profitable? Am I losing money? Do I need to roll it to some other expiration? Give it some time to work there. So those are three ways I can manage this trade here. So so I raise the number of contracts. I'm going to go over here to confirm and send, and you can see we're roughly putting up around $2,300, and then all the numbers look in order. Click
Great.
on confirm and send, or excuse me, send this trade off. So hopefully we get
Awesome.
filled.
Yeah, I love how you added the trade management notes there, Harold. Before you click off of this, how do you go about determining the strikes? Are you looking at something around the 30 delta, or walk us through how you go about strike selection?
Right. That's the first thing. I like to look at the 30 delta. And I'll start with the 30 delta. And then I like $5 wides on my trades here. So I'll do start with the 30 delta. That's the 30 delta, that's where I'm selling. So I'm going to sell the 30 delta, and then I try to go $5 wide, and I say, okay, well, what do I look what kind of credit am I receiving? So that 30 delta, that's the first thing I'm looking at, whether I'm doing a bull put spread in this case, or if I do something bearish, I still
Mm,
look at the 30 delta on the call side.
nice. All right. Well, thank you so much, Harold. And one more thing I want to note about Oracle's chart is that break even, Harold, I think it was 113, it was just under 113.43, which is right around that low from 7-Eleven, and right around if the 50-day line comes up a little below the 21-day. So a very logical level
Yeah,
for that break even on this
yeah,
chart.
everything is lining up.